Hey guys, welcome you all to a new video. This is CA Ganesh Bharadwaj. So if you are a CA intermediate student appearing for the upcoming November 2023 exams, especially if you are going to appear for this paper costing, then this video is a must watch for you because I'm going to share a most likely exam question, a very important question that is most probable to come for the upcoming exam, that is in November 2023 for costing paper. Now, guys, about 1 month back, our institute released 1.5 months back, they released this revision test paper. Just like for every attempt, they release an RTP. But there was one thing that was unique in this time's RTP, in this November 23 attempts RTP. There was a question in marginal costing that stood apart from the rest of the questions. And this question that I saw in marginal costing, you cannot say it is out of syllabus. At the same time, this question has never appeared in any of the past ICAI publications. If you want to see, if you can just go and check the past RTPs or your institute study material or even your past exam questions, this question has never been tested as such, but all the concepts are up there in your CA intermediate syllabus. But this time it was a very, very beautiful question which they have introduced, which they had actually kept in your RTP. Silently, it is sitting inside one part of a question. Now, you might not have noticed it, or some students might have noticed, I do agree, but I felt that this question, now that it is appearing in the attempts RTP at the intermediate level, anyways, for final and all, yes, this sum is fine, but at the intermediate level, since this question is appearing in the RTP, in your attempts RTP, I feel like it's all set to appear in your exam. So, of course, no one knows what the institute, how the exam paper is going to be like. But since this is appearing in the RTP, this attempts RTP, and this question is slightly tricky, I have a gut feel that this question can come for your November 2023 exam. And that is the reason why I'm making this dedicated video for that one question in marginal costing, which I feel can be tested for 10 marks. If not, it can be tested for 5 marks, but definitely not less than that. 5 to 10 marks somewhere this question can be tested for. Clear with this? So now let's get started with the question and see the question that I was referring to right now. Now this question is appearing in our RTP as question number 12A. Okay, so let me read out the question for you. I will explain everything and see if you are able to get the answer by yourself. But I feel this is very, very important for the upcoming November 2023 costing exam in your CA intermediate. Let's get started. A dairy product company manufacturing baby food with a shelf life of 1 year furnishes the following information. So there is a company that manufactures baby food. Let us say, for example, Cerelac. Okay, some baby food product they are manufacturing. This has an expiry of how much? 1 year. So it has to be sold within 1 year, right? What are the data they are giving in the question? On 1st April 2023, the company has an opening stock of 20,000 units, 20,000 packets, whose variable cost is 180 rupees per packet. So on the 1st April of this particular financial year, they have 20,000 units of the product. The opening cost was 180 rupees. So the opening stock of this year is nothing but the closing stock of the previous year, or in other words, the previous year's production that got unsold remains as closing stock, correct? And the previous year's cost of production was 180. That's why it has been valued at 180 rupees. Then in 22-23, that is in the previous year, the production was 1,20,000 packets, and the expected production in 23-24, the current year, is expected to be 1,50,000 packets. The expected sales for 22-23 is 1,60,000 packets, right? So in the last year, the production was 1,20,000. This year, 23-24, they are expecting the production to be 1,50,000. They are expecting the sales to be 1,60,000, right? Next, in 22-23, that is the last year, the fixed cost per unit was 60, and it is expected to increase by 10% in the year 23-24. So last year the fixed cost per unit was 60 rupees, correct? This year it is expected to increase by 10%. Then the variable cost for this year is expected to increase by 25%, which means what was the variable cost in the previous year? The variable cost per unit in the previous year is 180. Sir, this is 180. This is the variable cost for the opening stock. No, sir, opening stock is nothing but the previous year production unsold only, no, correct? So technically this 180 rupees is the variable cost cost pertaining to the previous year, correct? So this year's whatever I'm going to manufacture, the variable cost will increase by 25%. Selling price for 23-24 has been fixed at 300 rupees per packet, right? You are required to calculate the break-even volume in sales, break-even volume in units for the year 23-24. Now, sir, what is the big deal in this question? Simple break-even point calculation only, no sir? Yes, simple break-even point only, but there is one small catch in this question. Now, what is break-even point formula? That is, what do you mean by break-even point? We've seen this. Break-even point is nothing but it is a point of sale where my total profit is zero, or in other words, it is a point of sale where my contribution is just sufficient to recover my fixed cost and I'm not left with any profit, or I am not left with any loss also. Are you clear with this? Or in other words, we can say that break-even point in units, if you want to calculate, what is the formula? Fixed cost divided by contribution per unit. Yes, so fixed cost is the amount that I need to recover, and every unit generates a contribution of so and so rupees. So how many units I should sell to recover my entire fixed cost? This is the logic for the formula that we have already seen, right? Now, sir, this is all it is, no sir. So take the formula, put it, no, what is the problem here? Now, it is not as simple as it sounds to be. Why? Because now what happened in this year, that is for the financial year 23-24, look what they are saying. Their expected production is 1,50,000. Yes, but they are also saying there is an opening stock of 20,000 units. Correct? Yes, guys, there is an opening stock of 20,000 units. Now, for this 20,000 units, the variable cost per unit is 180. Correct? For the current year units produced, the variable cost, they are saying it increases by 25%. So it's going to be 180 into 1.25. So in the current year, whatever units I manufacture, it will be manufactured at the rate of 225 rupees. Correct? So, or in other words, opening stock units, the current year production units, if you see both these, whatever it is, the units that I'm going to sell in the current year, the selling price will be fixed at 300, no doubt. But if I am selling my opening stock units in the current year, the opening stock units has a variable cost of only 180. So the contribution for every opening stock unit sold will be 120. Whereas the contribution for every current period production units will be how much? 300 minus 225. It's going to be how much? 75 rupees. Now, in this question, we have two contribution per unit. For 20,000 units, it is going to be what? 120 rupees is the contribution per unit. For the current year production units, every unit generates a contribution of 75. So here in contribution per unit, what I should take? This will be the typical issue that you will face in the exam. So if you have not seen this question without revising this question or without seeing this question, if you directly see it in the exam, it can come as a surprise element. So this is the issue in this question. How are we going to handle it is what we are going to see in this particular question. So now guys, this is basically simple. If you use some logic, some common sense you will automatically get it. Now first what we need to do now, we need to compute how much is the fixed cost. How much is the fixed cost we need to compute. Now for the year 22-23, correct? For the year 22-23 and now for the year 23-24. Now tell me, what is the fixed cost for the year previous year 22-23? So previous year they have said the fixed cost per unit 22-23, the last year, 60 rupees per unit. And in the previous period, how many units were produced? 1,20,000 units were produced, correct? So fixed cost will be 1,20,000 into 60. It is going to be 72 lakhs, correct? So the fixed cost of the previous year is 72 lakhs. How we got this? 1,20,000 units into 60 rupees. Are you clear with this? So in the current period, what will be the fixed cost? So they have said the fixed cost will increase by how much? The fixed cost is going to increase by, so the fixed cost is expected to increase by 10%. So it is going to be 72 lakhs into 110%. Correct? So 72 lakhs into 1.1 or 110%. The current year's fixed cost to be recovered is how much? 79,20,000. Are you clear with this? Yes, are you clear with this? Now, what is the contribution per unit? What is the variable cost per unit for the previous financial year, that is 22-23. In the previous financial year, the variable cost per unit was how much? 180 rupees, correct? It was 180 rupees per unit. In the current period, how much will it be? It will increase by 25%. So 180 into 1.25. So in the present year, 23-24, the variable cost is going to be how much? 225 rupees per unit. How we got this? Rupees 180 into 125%. Are you clear with this? Have this concept very clearly. I've already told this in the lectures. Fixed cost should be represented in total. Variable cost should be represented on a per unit level. Any changes, so for fixed cost, the change was applied on the total figure, whereas for variable cost, the change is applied on the per unit figure. Why? That is the cost behavior pattern. Fixed cost is a cost that remains constant in total, whereas variable cost is a cost that remains constant on a per unit level. So it makes sense to represent fixed cost in total. It makes sense to represent variable cost on a per unit level. And from there only any changes should be accounted for. Are you clear with this? Yes. So now we have got this. Right. Now, the question is, in the current period, I need to recover 79,20,000 rupees, correct? So basically the point of sale where my contribution exactly recovers the 79,20,000 rupees of fixed cost is only called as my break-even point. Yes. Now, how am I going to do this? Now, if you see, I already have an opening stock of 20,000 units, correct? I already have an opening stock of 20,000 units. Now, each of these 20,000 units generate a contribution of 120 rupees, 300 minus 180, 120. Whereas the current year units, every unit generates a contribution of 75 rupees. Now, how will I go about in finding out the break-even point? The answer, a small hint to this particular step lies in the very first line of this question. Read the first line of the question. A dairy product company manufacturing baby food with a shelf life of 1 year. They have clearly given that the expiry date or the shelf life of this particular unit, this particular FG, the product that they are dealing is exactly 1 year, which means the company always, no matter what, this company should always follow first in, first out method. Yes or no? Why? Because whatever got produced first, that only you need to sell first. Why? Because if you delay it for a later date, then it might turn into an expired product and you might not be able to sell it. So this hint clearly says that whatever got produced first will only be sold first. Are you clear with this? Going by this logic, so now we clearly know that first, the company will try to exhaust and sell off this entire 20,000 units which was there in the opening stock, correct? And the balance whatever units will only come from the current year production. Yes. Now you tell me, how much is the total fixed cost to be recovered in the current year? So fixed cost to be recovered. Guys, without conceptual knowledge, this question you cannot even touch. If you just mug up fixed cost by contribution per unit, this question you cannot answer. Look at how conceptual Institute is slowly trying to move into. Now look at this. Anyways, it has been conceptual till date. Institute testing has been conceptual. Now they have gone to another level altogether. So that's the reason why I'm expecting this question for your upcoming exams. So what is the fixed cost? Overall fixed cost. The total fixed cost that I need to recover to break even, rupees 79,20,000. So I need to recover a total of 79,20,000. Yes. Now we know that the company is obviously following first in, first out. How do we know? They have given the shelf life is 12 months, correct? 1 year, whatever it is. So which means the company will first anyway sell this 20,000 units, right? So now you tell me what is the contribution? What is the contribution generated from the opening stock units? So now I need to calculate what the break-even point, that is the total number of units sold, so that the overall contribution generated should be able to recover 79,20,000. I'm telling you, first anyways, I know that I'm going to sell 20,000 units of opening stock, correct? And each unit in opening stock generates a contribution of how much? 120 rupees, correct? It generates a contribution of 120 rupees. So now 20,000 into 120, how much is this? 24 lakhs. So out of the 79 lakh 20,000 that I need to recover, to the extent of 24 lakhs, I am able to generate contribution out of my opening stock units. So which means from the 79 lakh 20,000 of total fixed cost to be recovered, I am reducing 24 lakhs. I am reducing 24 lakhs. Why am I reducing 24 lakhs? I'll tell you now. So 79 lakh 20,000 minus 24 lakhs gives you how much? 55 lakhs 20,000. What is this 55 lakh 20,000? 55 lakh 20,000 is the fixed cost to be recovered from the sale of current year production. Are you clear with this? So overall, in this current year, overall through my sales, I should generate contribution so that it is able to recover 79 lakh 20,000. Out of this, 24 lakhs comes from contribution arising out of the 20,000 units in opening stock. So which means the balance amount of 55 lakh 20,000 should be the contribution that should be generated from the current year units for me to break even. Correct or not? Yes. So now you tell me, what is the contribution per unit for current year production? So contribution per unit for current year production, how much is this? So every unit produced and sold in the current year generates a contribution of how much? 300 minus 225, it's going to be 75 rupees, correct? So in the present year, so anyways my selling price is 300, but if I'm going to produce in the current year, the variable cost is 225, correct? So which means my contribution per unit is going to be how much? It's going to be 75 rupees, correct? So it's going to be 75 rupees. So you tell me, in the current year, how many units I need to produce to break even? So current year production to break even. So how much is this? 55 lakh 20,000 divided by 75 rupees, divided by 75 rupees. So it's going to be how much? So in the current year, I need to produce and sell 73,600 units to break even. So wait. So this is not the final answer. So basically, if you see the total answer, the break-even point is going to be how much? The break-even point is going to be, so I should sell 20,000 units that is coming from the previous year, that is opening stock, plus in the current year I should manufacture 73,600 units and sell that also. So overall my break-even point is happening at how much? 93,600. So my break-even point for the current year is going to be 93,600. This 93,600 breakup is 20,000 units of opening stock and 73,600 units to be produced and sold. So I need to sell 93,600 units to be exactly able to reach my break-even point. That is, I need to sell 93,600 units to exactly recover this 79 lakh 20,000 to generate a contribution that exactly is equal to my fixed cost and results in a no profit, no loss. Are you clear with this? Are you clear with this? Very, very important sum. And I'm again and again telling you, I'm expecting this sum in this upcoming exam because I've never seen this sum in any of the past ICAI publications for the intermediate level. And just look at this. Overall, I need to recover 79 lakh 20,000. Out of this, the first 24 lakhs is being recovered from the contribution generated out of the opening stock units. So the remaining 55 lakh 20,000 is the contribution to be recovered by the current year units. So the current year units each generate a contribution of 75 rupees. So how many current year units should be produced? 73,600. So overall, how many units I should be able to sell to generate a contribution of 79 lakh 20,000? So it's going to be opening stock of 20,000 units plus current year production of 73,600. So overall, it's going to be 93,600. And this is the answer to this particular question. You just look at it. This is what they have given here. So this is what they have given here. Look at this. So 93,600. Look, they have very clearly given from the current year production 73,600, from the opening stock 20,000. So current overall the break-even point is 93,600. See how they have arrived at this working notes. So 22-23, the previous year, current year 23-24, the previous year. So fixed cost 72 lakhs. Current year it has increased by 110, that is, it has increased by 10%, so 79,20,000. Variable cost of the previous period was 180 rupees per unit. In the present year, it has increased by 25%, so it's 225. Correct? So now look at this. Since the shelf life of the product is 1 year only, hence the opening stock is to be sold first. Very, very important thing. Look at how beautifully they have given the interpretation. Now, had you not noticed this question, in the exam, this would have definitely been a surprise element. I'm not saying you will not be able to crack and all. No, I'm not saying that. But this would have been a surprise element. This might not strike you. Fine. So look at this. Since the shelf life is given as only 1 year, they follow FIFO method, or you can say the opening stock will be sold first. First in should go out first. First in, first out. Right. So total contribution required to recover the total fixed cost in 23-24 to reach the break-even volume. So I need to recover a total of 79,20,000. Correct. So from this, I will reduce the contribution generated from the opening stock units. So to 20,000 units. So into what? Into 120. So this is 300 minus 180. 300 minus 180 is what we have done here. Look at this. 300 minus 180, 120. Clear with this? So 20,000 into 120. So minus 24 lakhs you do. Yes, the balance contribution to be recovered from the current year production units is going to be 55 lakh 20,000. So units to be produced to get the balance contribution, 55 lakh 20,000 divided by 75. How did we get the 75? 300 minus 225. Look at this. 300 minus 225 is 75. Right? So in the current year, you need to produce how much? 73,600 to break even. So which means total break even sales is going to be 20,000 units of opening stock, and current year you need to produce 73,600. Overall, in the current period, only if you sell 93,600 units, you will be able to achieve the break-even point. Are you clear with this? Please mark this as important. The day before your exam, this is the must-visit problem. And if my guess is right, this question is most likely, and it's all set for the upcoming exam, since this is a very unique question. See, there are many questions in RTP for other chapters also. Correct? So this sum alone I'm saying because this is a very, very unique question that has not been available anywhere in the ICAI publication for your CA intermediate level. For the first time, they have actually incorporated this in the RTP. So you cannot say it is out of syllabus or not. It is 100% part of your syllabus only. Clear with this? In fact, for the new syllabus, that is May 2024 exam onwards, I had already prepared my material. But once this RTP got issued, I had to go and include this sum. I included the sum in the marginal costing chapter. A very, very beautiful sum. Not difficult and all. It just requires some logical common sense. Clear with this, guys? So that's about this particular question. So please make sure that you revise this question. Make sure that you have a complete clarity on this particular question. So if you feel you have learned something useful, so please do share this with your friends. And yes, you can please share it with your friends, and so that they can also benefit out of this. So that's it from my side for today, guys. So thank you all so much. I will see you all in the next one.